everybody, and welcome to One Sustainability. One Sustainability features entrepreneurs, founders, and business leaders who have sustainability as a core component of their overall strategy, presenting on cutting-edge topics and the latest industry developments. Our goal is to educate and inform the global business and entrepreneurial communities on the importance of sustainability and to promote and support sustainable business growth all around the world. Today, we're very pleased to welcome leading global sustainability entrepreneur, investor, and advisor, David Pieper. David Pieper is the co-founder and systematic strategy specialist of Intalcon. At Intalcon, David and his team offer financial institutions, such as asset managers and funds, systematic investment strategies, so-called algorithms, that they then use for investment decisions in asset classes, such as equities and bonds. David started his professional career as an investment advisor and has gained several years of experience in investment research at LBBW, Landesbank Baden-Württemberg. David has been involved in technical analysis and the development of rule-based trading strategies for 20 years. Now, David, it is a great pleasure to have you here with us today to hear more about understanding sustainable investing. And at the end of your presentation, there will be time for Q&A, which we'll be able to handle. Thank you and welcome to One Sustainability.
Thanks a lot for the introduction, and also a big thank you for inviting me and the ability to speak about our mission, about Intalcon. And yeah, I'm happy to be here. Good morning to you all. Okay, great. So yes, what's the topic for today? Yes, my topic of today is I would like to show you how you can support your investment goals and at the same time support the Sustainable Development Goals, the SDGs. This is our main mission. This is why we have started Intalcon and our mission Alpha for Impact. So this is my topic for today. And I would like to start with this picture here. I think it's pretty obvious that if you look into the newspaper every day, you watch online, we can clearly see that we have lots of challenges ahead of us in the next years and decades. And one of them, of course, is climate change and the climate crisis. And I think it's also clear that the time is really running out. We don't have too many years left to really make progress on this big topic and lots of challenges which are connected to it. And if you see what the UN, by the way, within the framework of Agenda 2030, has defined 17 Sustainable Development Goals. And if you look at the progress that we made so far, you can see on this slide here, if you look at global poverty rates, for example, we made significant progress, which is a good development, of course. But at the same time, there are many areas, for example, like climate action, where we really lack significant progress, where we are really behind the curve. And one of the things here is, of course, it takes a lot of money to make the progression, to make the transition into a greener and more sustainable environment and a greener future. We need a lot of money for this. And if you look at this chart here, I just have to put away this here. So if you listen to what Secretary General of the UN, Antonio Guterres, said, he said that we need around $7 trillion annually. This is the amount of money that is needed to for the funding to make the progress, in different areas. And we at Intalcon, we have been thinking about, okay, what what kind of amount is this? Let us compare this with the money, for example, which is allocated to public funds. So you can see 65 trillions are allocated in public funds only currently. So it's, I would say, roughly 10x from the amount that is needed for making the future more sustainable, right? So our question then was, how can we improve the management of such funds and make them more efficiently, and then help being a part of the improvement for the future, right? So because this is where we come from, we have been using algorithms and software for backtesting and for creating systematic strategies for many institutional clients. And we started Intalcon because we thought, okay, let us use this knowledge that we have collected over nearly 2 decades and to provide this to financial institutions to help them manage their funds in a better way. Because if you look at the real numbers, and these are numbers from Standard & Poor's, you can see that roughly 1/3 or nearly 1 out of 4 funds beat the benchmark. So it's around 75%, depending on the region that you look at. 75% of the funds don't beat the benchmarks, right? So there is a lot of room for improvement, and that's why I put the question mark here. Where's the alpha? Yeah, we are looking for the alpha. Everybody is looking for alpha, but yeah, the majority of asset managers do not generate alpha, and Intalcon therefore supports funds, family office, pension funds to manage their assets in a systematic way and to generate this alpha. The second point, which is I would say it's the main topic right now. No matter where you look online, there are 3 letters that are everywhere right now. It's ESG. And it sounds that ESG is like the solution for all of the challenges that we have currently and in the future. So each day there is a new ESG product which is launched, and it's introduced to the market. And the question is, what kind of returns can we expect from ESG investments? Will they be higher or lower? We are not clear yet, because if you exclude many parts of the stock market, for example, if you exclude many companies, then this will change your return perspectives. The second thing in this topic is, of course, there is no ESG rating standard on the horizon yet. So I read that it's currently 500 or 600 companies working on ESG ratings. Some of them use questionnaires, others use public data, others are doing it in a different way. So it's for investors, it's really hard to get transparency over such a product and over the approach, what really ESG means and how this really can help to improve our future. Another thing is, yeah, if you, for example, put more technology stocks into your ESG funds, which you can see very often currently, that's why they performed better last year. You cannot really compare them to the benchmark, because it's not an apple-to-apple comparison, right? So that might even lead to a lower diversification if you leave out a lot of sectors and stocks that are put into an ESG fund. And then there's costs. Of course, we all know that more money flows into traditional passive funds, which are the cheapest products in the market. And now, if you really want to do serious research on ESG, of course, that will have higher costs. So that's also one thing to consider. So these are the questions that arise if you think about ESG. But for us, the most important point is, where's the real impact, right? So what happens if I buy an ESG fund? Does the world change when a specific stock is just excluded from my portfolio? These stocks just move from one account to another, right? If I exclude a tobacco stock, or let's say a nuclear power stock, if I don't want it anymore, it's still there. It's just in the other investor's account, right? So it's not really changing anything. And the biggest question we have is, how does an ESG fund really provide money and the funds to support the SDGs? there is no impact, right? So that's why we thought of, okay, what could be the solutions? What kind of know-how can we use from our firm in order to generate the funds that are needed? And I just summarized our solution in the quickest format possible. So what we are doing at Intalcon basically is, the first point is we use algorithms. We don't rely on, let's say, research teams, on fundamental data or stuff like this. We rely on financial algorithms that are based on price, that are based on patterns, recurring patterns, which again are based on our human nature, on the biases we have, and I will come to that later. And the second thing is, using this algorithm allows us to generate alpha for our investors. And that's the main point. We need to raise the money. That means we need to make money for the investors, right? And if the investor is able to beat the benchmark and the strategy is generating alpha, then we as Intalcon take part of the money, of the fees that we generate, and we generate impact and support the SDGs directly. And that's the main difference. That's the sustainability approach that we stand for. It's not just saying, here's an ESG product, which doesn't really change the world. We really want to have an impact. And that's our solution in the, I would say in the shortest form. And just to define what is alpha, what do we mean by alpha? You can see this chart here, for example. The green line, this is one of our strategies. The gray line, this is the market or the benchmark that we want to beat. And we always compare on the same volatility, on the same risk level against the benchmark. Yeah, we want to have an apple-to-apple comparison. And if we generate more returns than the benchmark with the same risk, then we generate alpha. And then our clients are profiting from this, and we generate a performance fee. A part of the alpha is the performance fee that we are generating, and we use this to fund projects, social and ecological projects I will discuss later on. So let's dig a little bit deeper into that. The first point, we are using algorithms. We are listening to the word algorithm. It's like a buzzword every day nowadays, whether it's, cars, it's software. If you are online, algorithms are everywhere, basically. But why do we rely on algorithms? If you think about fund managers, asset managers, it's still the classic word. It's still, I used to be a research analyst. So we had a team of 100 analysts. And out of that 100 analysts, maybe 1 or 2 were looking just at the technical part. So looking at the prices, looking at momentum. 98 of my colleagues have been doing fundamental research, looking at balance sheets, looking at macro data, and so on. We really think that the human emotion is just a problem when you look at the financial markets. Our brains are not really made for the financial markets. And if you look at academic studies, it's confirmed by lots of research. Our emotions overwhelm logic and rational thought. And this is can be seen particularly in times of stress. If you look at the Corona crisis last year, it was the fastest crash, I think, in history. Also the recovery. Yeah, nobody has expected such a significant and fast recovery. For an algorithm, the algorithm doesn't really care. The algorithm looks at the trend, at momentum, at volatility, and makes the decision based on objective facts, not on gut feelings or fear or anger or whatever. Yeah. So there are many behavioral biases, and they undermine our decision making. That's why it's the issue. And if you remember the chart I showed you before, the majority of investors, and it's not really the difference between whether it's retail investors or professional investors, they underperform the benchmark. Yeah. So on average, we as humans, we are overconfident that we can beat the markets, but it's really hard because we make a lot of mistakes. Now, here's the interesting part. If there are behavioral biases, then there is an opportunity to exploit them, right? And that's where the algorithm really comes into play. The algorithm is using lots of historical data, has lots of ways to find out what kind of patterns are recurring in the market. And if you look at the markets, people always say the markets change a lot. Yes, they do. But at the same time, I would say they don't change because our DNA is not changing too. So that's why the history doesn't rhyme exactly. It doesn't repeat exactly, but it does rhyme. So, and this is where the algorithm really shows its strength. Yeah. So you can see the small graphic here. For example, confirmation bias. If you own a specific stock, your perception of the news articles is a different one because you try, even subconsciously, you're looking for news articles which confirm your view of the stock. You are bullish, you own the stock. So you are not looking at the stock in a neutral way anymore. Or the disposition effect. It's really hard to sell a stock if it's a small loss. People tend to hold on to the stock, while at the same time, the winner stocks in the portfolio are sold way too early. Yeah, and this has been part of the research from Daniel Kahneman, for example, who has won the Nobel Prize for this. So it's clearly confirmed by research that our emotions and we as humans, our brain is not really a good player in the financial markets. And that's why we rely on algorithms. If you look at the risk management, everything is rule-based, right? So the strategy that we provide can handle all volatility regimes. It doesn't really matter whether it's a sideways market, we are in a bull market or bear market. It's really adaptive. And the exposure, for example, if you look at the stock portfolio, is handled very flexibly. That means if the trend turns into negative, then lots of stocks are being sold and the exposure is very low. That was the case, for example, during spring 2020. And then once the market starts to recover, the algorithm detects the patterns and increases the exposure, yeah, based on clear rules. It's not about, should we buy, should we sell? It's just clear rules, yeah. The algorithm is the most disciplined investor and trader out there, and we can profit from that. And maybe one point I'd like to raise here, all of our strategies are based on investing and trading highly liquid instruments. So that's why we focus on US stocks and we focus on the futures market. So equity index futures and bond futures. Yeah, that's an important point. And that makes it, that enables us to really also run these strategies with large amounts of money. So it's not really restricted to a small amount. You can really use these strategies without impacting the order book and impacting the prices. I would like to show you some charts, how the strategy or some of our strategies have fared during some major crises. So for example, here the global financial crisis, 2007, 2008, and then the low was in March 2009. You can see the green line. The drawdowns are much smaller, so the algorithm really helped to decrease the risk, to lower the drawdown during the crisis. And at the same time, once the bottom was reached, the strategy very quickly adapted to this and increased the exposure here with US stocks. On the right side, we see the same time window, but this is our global equity strategy, which is using equity index futures. So you can see the drawdown was even smaller. So this makes perfectly sense to use an algorithm and eliminating emotions, especially during such times of stress. And here's the COVID crash from last year. I think it's the fastest crash, and the most dynamic one was even a little bit faster in 1987. So here again, we can see on the left side the US stocks strategy. And here on the right side, we can see the global equity strategy. And you can see in both charts, you can see that the algorithm has outperformed the benchmark. So it's another confirmation that this is the right approach. Okay, now we use algorithms. Now, how do we generate alpha? The first thing is all of the components of a strategy, the entry timing, the entry price, the exit price, and the position size are managed systematically. So there is no discretionary component in this. So it's a fully algorithmic and systematic strategy. The main point is, and that really separates us from a lot of competitors, our strategies are really robust. This is our main goal, is to stress test our strategies across different market regimes and different asset classes. And this way you can really prevent the strategy from being overfit, because there are many strategies which are just curve fitted, and then they they work well in theory, and in practice they stop working. So this is what we want to prevent, and what we really look out for. It's robustness. Our goal is to beat the benchmark, the respective benchmark, on the same volatility level by 25%. That means if, for example, the benchmark makes 10% this year, our goal is to make 2.5% more than the benchmark, than the total return. And I will show you some figures so you can see the historic results of our strategies. So here, for example, the first one that we currently offer, you can see this also on our website. It's updated monthly. This is the US equities strategy. The figures you can see show the last 5 years. So for example, the last 5 years, the strategy has outperformed the benchmark by 4.6%. And it shows a very attractive Sharpe ratio of 1.24. That means that the return is 1.24 times higher than the risk, the volatility. And if you look at the chart, it's a fairly, I would say, a low volatility equity strategy. That's why we compare it to the 60% of the S&P 500, right? So it has the same volatility, the same risk level as if you would own 60% of the S&P 500 and leave the rest in cash. So it's a low volatility approach. The second strategy, it's our global equity strategy. It's trading equity index futures, and it also did very well against the MSCI World developed markets. You can see that here also we have generated an alpha of 2.3% in the last 5 years. And again, the Sharpe ratio is above 1. And as you see in the chart, it's also a very low volatility approach. The volatility in the last 5 years was just around 6.8%. So it's something for investors who want to sleep well, even if there is a crash. It's a very low volatility strategy. The third one I would like to present here, to highlight here, is a bond strategy. Of course, we are not buying thousands of bonds, which are part of the World Government Bond Index, the WGBI. What we do is we mirror the same allocation, the same duration, using bond futures. And you can see here the correlation is, of course, very high, because it's basically the same characteristics, it's the same allocation, but through better entries and exits, the algorithm also here generates a positive alpha of 1.8%. So this is another confirmation that the algorithm really outperforms the market. Okay, now let's take the last point. Our algorithms generate alpha, and now how do we support the SDGs? What does Intalcon do really different than an ESG fund, which is just excluding some stocks or reweighting some green stocks, for example? We have a separate company, a foundation, the Intalcon Foundation, and the foundation provides financial contributions to selected organizations and projects. And I would like to start with the first one. It's Oceans 2050. And the vision of Oceans 2050 is to establish regenerative aquaculture, both as a business alternative and as a solution to address the climate crisis and restore the oceans. So that's clearly a sustainable goal of restoring nature. And we all know the dramatic increase in carbon dioxide in the atmosphere had profound effects on the ocean. And what, to date has little attention, that the ability of the oceans to capture and store CO2, carbon dioxide, is very high. So everybody's talking about, hey, let's plant a tree. Of course, that's a nice idea. But if you look at the oceans, if you look at the seaweed farms, for example, they have a much, much higher impact and opportunity to really capture CO2. So that's why we chose this project. And another thing is, seaweed farms also enable profitable businesses. Yeah, so they provide raw materials for inputs to food, fuel, and cosmetics, and they don't require fresh water, no deforestation, no fertilizer. So it's a really great approach, and we are happy to support Oceans 2050 with our Intalcon Foundation. The second organization we also support is Rewiring. This is a project supported by Leonardo DiCaprio, might have heard of it already. This is a flagship for conservation of the biocultural diversity. And together with Rewiring, we want to ensure the long-term survival of the saola. Did you ever heard of the saola? This is the beautiful animal you can see here. This is a primitive wild cattle species, and it lives in Vietnam and Laos in this area. And yeah, it's endangered by hunting. And so the wild animals are taken from the natural habitat all over the world and are sold at wildlife markets. And this is, of course, it's a big danger. It's also showed us the danger and the risks why COVID has spread. So this is also one of the organizations we support with the money that we generate with the performance fees from our strategies. And I would like to also show you the third one. It's CIIA Germany. CIIA has established Corona emergency response plans in I think nearly 70 countries around the world. And it helps really the most vulnerable people, so women, girls, and refugees. And it distributes medicines, disinfectants, medical protective equipment, and also drinking water and food. And there are many initiatives that CIIA Germany has started also with the local teams in the specific countries. And yeah, we are really happy to also support this organization. And these are the three projects and organizations we support through the Intalcon Foundation. And I'm pretty sure that there will be more in the future, also depending on how many assets will be controlled by our algorithms. The more, the better, because the more alpha we generate, the more happy our clients are, and the more happy and the more impact we can create in the world. And that's why we are really proud of our project, and we hope that we can continue with that. And yeah, I would like to also show you and present you some of our supporters. Alexandra Cousteau, she's an environmental activist and filmmaker. Maybe you know her grandfather, Jacques Cousteau, is a very famous person, and she continues his work, and we are really proud to have her on the advisory board. Also, Dr. Andreas Jacobs, it's a very famous German entrepreneur. He's also supporting our mission. And on the right, maybe you are a tennis expert. You know Michael Stich. Michael Stich was Olympic Games winner in tennis and also won the Wimbledon tournament. And he's the latest member of our advisory board. So we really try to spread our network and to really gain traction and to expand. And yeah, we hope that you support our mission too. And if you have, if you need some more information, we are happy to answer questions now. And you can also visit our website, intalcon.com. And yeah, I hope it was an interesting presentation for you to explain what we do and why we do this. Yeah, we have a lot of challenges ahead. So yeah, let's get the job done.
I find this a truly, innovative and approach that digs more deeply into a lot of these issues. And it's true that emotion has a big impact on this. Here in the United States, when they talk about the importance of investing in ESG, the only argument that comes out that I hear is that, oh, there are trillions of dollars going into ESG investments, so you should also be part of it. Mm-hmm. But I'm thinking also of the broader perspective, because in order to proceed with defeating climate change and so on and so forth, so much of it depends on history, on the way countries have been ruled and led for centuries or decades. If a country relies so much, for example, on oil production. How is it going to be possible to convince it that it should start moving to something else? A lot of these countries are unwilling to do that.
Yeah.
There's also political impact, where people are unwilling to believe that climate change is a serious issue, which is a way of hiding the real issues, but also of finding a way to justify the continued earning of good profit from producing oil and gas and so on and so forth.
Yeah.
Giving up coal. I mean, all these things. There are many practices which many countries, many people are willing to give up on because it's been part of their source of profit and benefits for so long. Now, given that, how can you dig into that barrier? It's not just emotion, it's history, it's culture, it's attitude. How can we modify that, make it change so that people begin to understand that more efforts are needed?
Yeah, I think there are many things you can do. But basically, in my personal opinion, I think that the first thing is people really need to be aware and need to realize that we need a change. Of course, we can see this all of around us, and I think we really need to be more active than just passive. So it starts with what kind of products I consume, how I use energy. Then on a political level, I would say it's about having a price for carbon dioxide. That's the simplest way, is to really get the money factor in it. If you look at the carbon prices here in the European Union currently, I remember a few years ago, they were like 5 or 8 euros at the exchange. Now we are at 80 euros. So it becomes clearer and clearer that if you're stuck with your old heating system at home, it will be so expensive, you will need to switch if you want to save your money. So it's a financial, I would say, motivation. Yeah. At the same time, of course, we need the EU, for example, is working on the new taxonomy for green investment and ESG. So there's a lot of things already going on, but I think we need to really make clear, and the politicians have to tell people this will cost a lot of money. I don't believe the stories, hey, we can make a big transition, but nobody will get hurt. That's not true. It costs a lot of money. We need to change behaviors. We need to change companies. We need to finance this. And there are many new things going on. We have green bonds. We have sustainable projects. We have the politicians waking up. The young generation is protesting in the streets. So I think it's happening already. Yeah, but as you say, maybe it won't happen overnight. But we just want to be a very, very small piece of the puzzle, and use our job background to be a part of this and to generate money for the transition. And that was what's driving us personally every day. When I come into the office, I'm always thinking of, hey, what I do here has a small impact in the world. And that's very satisfying.
Yes, that's already very good. And I'm sure you will have an impact. I mean, if you look at the results of COP26, there were a lot of big statements, but you can also feel the hesitancy and the resistance among many parts of the world to commit to fundamental change. Okay, there were some big statements made, but there's still quite a long way to go.
Yes, to be honest, I didn't expect much, and I wasn't surprised. I think that the real change is happening. It's happening here with us personally. We can change. I always think we don't have to wait, for the politicians or other people to change laws and regulations. We can start now, and we are 7 billion people, so we can start. And that's why I think it's our own task. Everybody needs to become active and to be a part of the solution. And even small changes will have a progress and will have an impact. but I think I'm realistic. It will take longer that people wish or they anticipate. I think it's a big transition. It's basically the main parts of the economy need to be changed, and it's a big transition in the energy sector, in the automotive space, and this won't happen over a few years. So
Yes.
but we
Yeah.
are on the right track, so let's continue.
Indeed, indeed. And there's a comment made by Andy here. If more money chases different industries, behavior will change. For example, fish farmers are repurposing to seaweed farming here in Scotland, protecting livelihoods and keeping a culture of being a seafaring nation alive. So this is a wonderful example of the willingness to move to something that is more reliable and has a more positive impact.
Yeah, that's a great example.
Okay. Yeah. Well, I think we've reached the end here. And David, we want to thank you once again very much for your time, your presentation as part of the One Sustainability series. These are excellent examples. And so thank you very much once again. And we look forward to talking to you about this again soon. So thank you very much.
Thank you for the opportunity, and yeah, have a great weekend.
Yes, you too.
Thanks a lot.